Hey guys, what's up? Welcome back to the channel. Cathie Wood is undoubtedly one of the most popular investing personalities right now. After growing her company ARK Invest funds by $10 billion in 2020 alone, the superstar investor has amassed a net worth of $60 billion. So, having an investment mindset like hers and learning her investing strategies will surely be beneficial for you. Here's how to invest like Cathie Wood. But before we get into that, make sure to leave a like and subscribe and hit that bell icon so you don't miss out on any of our videos. Alright, let's get started. Number 6. Build a solid foundation. There's no denying that financial setbacks and money emergencies can hit you when you least expect them. Regardless of your intentions and how ready you think you are to make an investment, with your current employment status, it's necessary to have enough emergency savings in your account. Building a solid financial foundation also includes paying off any remaining loans and staying out of debt. Take your time to work on your debt-to-income ratio before making any serious investment plans. Also, follow the rule, live off one income, invest the other. Also helps tremendously. Number 5. Understand the investment. It is necessary to understand the investment you're making, and one of the best ways to do this is to build a diversified portfolio of mutual funds. If you plan on investing in individual stocks, make sure to understand each company those stocks represent before you go ahead with your investment plan. Develop a plan of action and proactively determine where you are in the investment cycle, what your goals are, and how you plan on reaching them. Make sure you understand your investment strategy, and in case you don't feel qualified to do all this, you can always hire a trustworthy financial advisor or planner. Also, try not to confuse investing with trading. While trading is focused on instant profits and is more short-term, the term investing is linked to long-term benefits that require a lot more patience. Number 4. Keep your emotions in check. Letting your emotions rule is never a great idea, but it's especially disastrous when you're trying to invest successfully. Billionaire investors like Cathie Wood don't allow fear, anger, or greed to control their decisions and cloud their judgment. Instead, they think and act rationally and focus on the bigger picture. Stock market returns can deviate wildly over a shorter time frame, but in the long run, historical returns for large cap stocks can average 10%. Patient investing decisions are always better than irrational ones, so make sure to keep your emotions in check. After all, a slow and steady approach to portfolio growth is known to yield better results, so you need to keep your expectations realistic with regard to the timeline for growth and returns. Number 3. Remember to diversify. Although professional investors can usually achieve excess return over a benchmark by investing in a few concentrated positions, this strategy isn't very beneficial for regular investors. In fact, it's recommended to follow the diversification principle, which involves allocating exposure to all major spaces while building a mutual fund portfolio or exchange-traded fund (ETF). A well-diversified portfolio that includes assets other than stocks will ensure when part of your portfolio takes a hit, the part will remain stable. For example, when stocks plummeted in March of 2020, treasury bonds held their ground, and investors who held both were probably less anxious when checking their portfolios. There's also a rule of thumb: do not exceed allocating 5 to 10% to one major investment sector. Also, make sure you're not too focused on the company that you forgot you purchased the stock as an investment. Remember, it's less about the company and more about the stock. So, if any of the fundamentals that convinced you to buy into the company change or are no longer there, consider selling the stock without bounding yourself with the company. Number 2. Keep your eye on the prize. This is a common rule to live by in the investment world, one that's followed by Cathie Wood herself. The billionaire investor doesn't waste her time worrying about little short-term details like how a company missed the estimated earnings in a certain quarter. Instead, she thinks far ahead in the future. She pictures growth in a matter of years and even decades, which reflects the fact that she thinks exponentially instead of linearly, and always keeps her eye on the prize. Number 1. Learn to take a risk. A talented stock picker always finds something that fell through the cracks and is willing to take a calculated risk on. For Cathie, it was Tesla. When she picked the company's stocks, Wall Street predicted that legacy automakers would soon outcompete Tesla, and the company's stock market was too volatile as well. So no one understood Cathie's choice. But it later turned out to be one of the best and most profitable investment moves she has ever made. Today, Elon Musk's automaker has hit a market cap of $602 billion. And unsurprisingly, Cathie's company, ARK Invest, not only made Tesla its single largest holding, but also boosted its position by 39%, or 1.7 million shares during the first quarter of 2021. The stake, which accounts for 7.6% of ARK Invest's equity portfolio, was worth around $4 billion during early 2021, and it makes perfect sense why Cathie Wood chose Tesla. Besides being the top competitor in the EV automaking business, Tesla is full of innovation, which perfectly fits Cathie's investment approach. That brings us to the end of the video, and we want to thank you guys for watching.